Good night again, everyone. Before we get into the daily recap, I would just like to reiterate the process that you would have to implement in order for you to be successful, or for you to, if you're not successful, to control your risk, to preserve your capital. So one of the very important tools for you to have is your trading plan. So the trading plan would structure, the trading plan would structure how you approach the markets. You don't want to just go into the markets and be making decisions off the top of your head. The trading plan would give you a structure, and this would be something that you would have already tested using the backtesting feature on TradingView. You would have already demoed, and you would have already used a small test account. But this is my ideal setup. All right, so tight Asian session, so accumulation, London session first leg, New York session second leg, entry trigger on the second leg, entry trigger within first 2 hours of New York, acceptable risk, and directional bias confluence. So these are my 7 items that I would check, and if I get this is a really good trade for me to take. You can see an example of the buy setup and the sell setup along with the entry triggers. So once you have an idea of what your ideal setup is, it doesn't necessarily have to be this exact thing. You could have different variations of it. You could input your type 1, type 2, but the idea is that you have a plan. You're not just entering the markets and taking trades based on how you feel that day. You have a structure. Second part is your risk management. Remember at the start I mentioned the trading plan would either make you successful or it would help you to control your losses. This is where the risk management comes in, right? So for position, I'm risking 0.3. Daily, I'm risking 1%. Weekly, 3%. Overall, 10%. So at no point am I ever risking more than 0.3% on any position. For the day, if I lose anything close to 1%, I'm done. If I lose 3% for the week or anything close to 3%, I'm done. Come back next week. Overall, if I lose 10%, I'm done trading the live account. Go back and test the strategy or wait it out for a period of time. It might be a mindset issue. After reviewing my activities, after losing the 10%, it might be that I've been taking trades that I should not have been taking. Then I need to review that, check and see whether I'm in a good frame of mind during the time that I'm trading. So stop trading live. Don't get yourself more involved in more losses. Review what may have gone wrong, reassess, and then get back when you're in a better shape. Right, so risk management, very important. Right, so notice I have that second. So after you have your setup, ensure you manage your risk properly. Not because you have a good trading setup, a high probability means that you're going to risk 50% of your account or any high amount, because the next trade that you take could be a losing trade. And if you risk too much and then you lose that trade, you're down by way more than you had budgeted for, then it affects you in a lot of ways. Right? So risk management, very important. Profit target. Profit target would be a product of your risk management. So for me, I do 1 to 2 risk to reward on all positions. Except if I'm swing trading, of course, I would just take some partials and let it swing. But for position, if I am up 0.6%, that's acceptable. If I make 2% daily, it's acceptable. 10% weekly, acceptable. Stop trading. Monthly, 40%. And this is all a direct product of the risk management system. Trade management tactics. So I take partials of at least 50% of what I risk when I'm at 1-to-1. So let's say I risk 5 lots, right? if my stop loss was 30 pips and the trade goes into profit 30 pips, I'm taking 2.5 off of that trade, right? So I'm already at break even when it's at 1-to-1. Then I could either decide to move my stop loss to break even, and if it comes back up and I get stopped out, I'm fine. Or I could move the take profit into profits, and if it come back up, I made profits for the day. Right, for swing positions, I move the stop loss into profit when it reaches day 1-to-2. So I would have already take partials at 1-to-1, and then stop losses move into profit when it's at 1-to-2, and then let it swing. If it comes back up, I accept the loss. But it wouldn't be a loss because I already took partials. I'd accept break even on the other position, but overall, net profitable. Journaling is also important. Remember, I was mentioning if you had a bad week or if you lost your daily quota, your weekly quota, or your overall quota. Let's say, for example, I lost 10% of my account over a three weeks period. How do I now go and review what I did from my journaling? I could check and see, okay, so I took one position here. Maybe I took the position too early. Maybe the risk was not acceptable. Maybe there was not directional bias confluence. So you could go back and check and see what did you do, and it helps you to reassess yourself before you come back to the markets. So it's important to have this in place. Next thing you should have in place is a system that helps you to enter the market without having to do a lot of calculations. All right, so you would recall that my risk to reward is 0.3 per position and 0.6 is the reward per position. This worksheet helps me to risk $60 on every trade, the most, and go for 120, the most on every trade. So it doesn't matter if I'm trading gold and then I take a GBP NZD trade, all of my risk will remain the same. So if I lose a trade on gold and I have an opportunity on GN and I win the trade on GN, I would have recovered what I lost on gold plus made $60 profit, right? So how this works, let's say for gold, for example. So this is a tool, the short tool that you could use. Settings. What did we say is acceptable risk on gold? A stop loss of 47 pips is acceptable risk. So 47 pips, and we're going for 93 pips as take profit. So this risk to reward would cover your peak high, and it would also give you substantial profit. So if you took this here, you could have been in profit there, right? So you don't have to do a lot of calculations. You just come here and check and see, okay, if it's 47 pips or less, that's fine. I could use a 0.13 lot size and go for this take profit. That's going to give me good space here to deal within the volatility of this pair and still maintain my risk while making the percent that I am targeting if the trade plays. Another example, let's see Euro. Euro USD. Where is Euro USD? Euro USD, right? So for Euro USD, acceptable risk is 11 pips stop loss, 22 pips take profit, and the lot size is 55. So you go to Euro USD. Let's do this example here, right? Because this one had a good setup. We have the Asian, first leg London, second leg New York. A nice entry trigger there, acceptable risk. We're seeing 11 pips stop loss, 22 pips take profit. Let me just zoom in a bit. All right, so this is our setup. So after you get your entry trigger here, which is a railroad track around the opening of the New York session, well, not around the opening exactly, but during the New York session, it comes back to the previous peak. That's your entry trigger. We didn't have anything really coming up here, but this one is a railroad track. You could either take your entry higher, or you could take it immediately as that candle closes. But you could have also taken it up here when you got that mitigation. If you are taking it up here, the 11 pips would take you way above this peak, which is good. If not, and you took it as soon as it closed, this is just at your peak, which is still acceptable, right? So you could just use your 0.55 lot size, get these, that is 11 pips and 2 pips, so just get these parameters, put in that as your profit level, put in that as your stop level, and let the trade run, right? Play it out nicely. So any pair that you're trading, if you already establish what is your risk and what is the reward you're going for, this tool helps you to decide what lot size to use that would stay within your risk and that would allow you to just risk a standard amount and go for a standard amount. And it also fits within the pair. Notice we're using different stop loss and different take profit for each pair, but still we're getting this evened out risk. So it looks at the volatility for each one of those assets. So you could really just come here, look at what you're trading and copy and paste or just type it over. If you're using your laptop, you could just copy and paste this over. If you're using your phone, you could just come here and look at it and type in your numbers. All right, so we've done talking
Hey,
about...
Hilton, can I ask a question?
Sure, go ahead.
Yeah, can you go back to the yeah, right there. Yeah, man. Listen, so do you just update the balance? That's all. Like once someone receives this, right? You just put your whatever your balance is inside there, and you adjust your risk percentage, and everything else is populated. Or what does someone have to do when they get this template to get the information you have here?
Update
Because
your...
you know we have different about account balance, right?
Yeah. So let's say you have $500. Everything updates.
Right. So we're not changing. All we're changing is the balance. Can you change the risk percentage too? Because
Yeah.
like let's say someone wants to risk 0.5% to go for 1.5%, 1 to 3 as an example.
Sure. If you're risking 1% for 3%, it updates.
Okay, good. And the volatility part, like, okay, I didn't really explain much about that part. I was just trying to figure out, just the thought process or the understanding behind that there. Even though you don't use it, I guess it's irrelevant, right? You don't really need it, right?
You don't need the understanding behind it.
All right, thanks. I got it.
Yeah. All right, so that's the system, guys. Have your trading plan. I explain the reasons for that. Have your risk management. You could literally just use this here and plug in your values. It makes the process simple of what you should use and how you should risk on each pair, etc. Then you conduct your business. The next part of it is staying disciplined to what you have. If you know that you have a good trading plan, you would know that from your back testing and your demoing, right? In order to have a good trading plan, you don't need to rush. Take your time.
Hi, Hilton. Is there anywhere in the group? I'm new to the group. Is there?
Come again?
Is there anywhere I can?
You're breaking up. You could leave a message in the Telegram. It seems your connection is poor. But let's continue. All right, so you have your trading plan, you have your risk management system. The next part now is being patient, being disciplined to your plan. No need to rush, guys. The market is going to continue.
The plan.
Somebody is speaking still?
Yeah, I think there's a delay in this guy. He's asking a question, but there's a delay, long delay.
Let me mute everyone. All right, yeah. So your connection is poor. Leave a message in the Telegram. We'll get back to it. And for persons on the call still, let's save the questions for at the end. Please, thank you. Right, so you have your system in place. Systems are very important in business. It takes away from a lot of the work that you would do on a day-to-day basis. So you have your systems in place, you know how you operate in this business. You come in every day, you follow your procedures, and then you review at the end of the day. You review at the end of the week. Check your performance. Was it good? Was it okay? Was it terrible? How do you adjust your system now to get back to a position where you would like to be? Right, so discipline and patience is very important in this business. All right, so for USD CAD, we had two great setups. This one here was a type 3. We know our directional bias is bearish, and we had an entry right there at the opening of New York. Take the trade, make your profits, move on, or hold a swing, see how it plays. And then on Wednesday again, we had another lovely trade. We know our directional bias is bearish. London session first leg, New York session second leg. Entry trigger there at the beginning, which is a railroad track. Acceptable risk, take it, profit. Really smooth trades. GU. I didn't have any nice setups during the New York sessions for GU, so I didn't trade that this week. There were some setups, not ones that I took though. GBP CHF, I was looking for this to go bullish. Made a trade there, came out early. Well, it didn't move, so I can't say it came out early. It came back and hit the low again. Today, they give a type 1, but I'm not interested in sells at the moment, looking more for buys. And this is going to happen to you. This is going to happen to you at times. You would see a nice setup. It's not in alignment with your directional bias, and you miss a trade. Big deal. You're going to get more opportunities. And this comes with, I believe, practice and experience, because if you're now learning the method, you're going to be very excited. You took a few trades, you're seeing profits immediately as you take the trade. It's going into profit, huge profit, three candles, and you're like, whoa, I grew my account 20-something%, grew my account 50-something%. All great, right? And then you look at these setups and you might feel like, oh my God, I missed out on this one. I could have doubled my account, right? But try not to chase it. That's why it's important to have the plan in place, have your risk management system in place, understand your directional bias on the assets that you're trading. So when something like this come up, you're not enticed to take it. You look at other assets that you're also tracking and see something that is within your directional bias. It's all about applying your system, applying your system, applying your system. And over a period of time of applying your system, you would see that it works, and it takes away from a lot of the excitement. And one of the reasons is that you have a risk management plan. So when you're making profits, it's not anything that, oh, I 5x my account in one trade. One trade doesn't make you a good trader. But if you're able to consistently, week over week, grow your account by 2%, 2%, 2%, 2%, or somewhere around that range, whatever the market offers to you, you take, then trading becomes very, very unemotional to you, right? You don't have any heavy risk every time you take a trade. You're not making any big set of money in one day, but your money is growing consistently, right? So this year, nothing to worry about. We didn't miss an opportunity. We're looking for the big moves, and we're looking for the moves that are going within our directional bias. So this brings me back to the point of having patience and being disciplined to your plan. Right, GN. So this is what being patient and being disciplined to your plan, these are the type of moves that you will get. We already established our bias on GN. It's bullish, right? We got an opportunity here on Tuesday. That's first leg, that's second leg, right at the opening of New York. Lovely risk, entry trigger, everything that you're looking for, right? So you don't have to try and force anything against your directional bias. Take the trade, take partials, hold another position because you're expecting it to trend in a certain direction. It's fine for you to try to catch a swing off of a day trade, at the trade entry, right? So you could take off some partials and let the rest swing. Boom, amazing profits. It didn't move immediately, gradually, but it's a huge move overall, right? You could have taken a position here again today, but this one didn't really play out. Maybe it will play into tomorrow. Because you have your patterns, you have your timings, you have your entry trigger. If you look at this as a bullish engulfing, then you have a retracement. You could be in that trade right now. Who knows, swinging because you have acceptable risk. You don't have to worry if this thing comes back and stops you out. Acceptable risk, right? Or you could have scratched that out and wait and see what happens tomorrow. All up to you, right? XAU USD, we established the bias for this as bearish. And notice we're talking about patience and discipline. We're still getting trades. We're still getting a lot of amazing trades, and all of this within 1 week. So there is absolutely zero need to rush it, zero. So on Tuesday, we had a type 2, right? Lovely entry trigger, railroad track, risk acceptable. That's more than 2 to 1, almost 2 to 3, in line with our directional bias. Boom. On Wednesday, I got stopped out on this one because I took this as the second leg, but it actually came back and stopped me out there. Then I took another entry here, closed off. I didn't hold this one, I closed off. I didn't trade this today, but this is a good setup as well, right? And for this one, we had the Forex master pattern. Right, the Forex master pattern gives you a type 1 setup as well, because it hits either above or below the Asian before it gives you the real intended move. So what do we look at here? And actually for the past 3 weeks, I've been observing the Forex master pattern has been playing out a lot, right? Very frequently. Most of the good trades in the week, they were off of the Forex master pattern. So what is the Forex master pattern? Accumulation in Asian, then we have the breakout either below or above. In this case, it's below. Then they hit the top, and then they give you their trend move, right? And we have this on our directional bias as bearish, right? So if this comes down here, we're not looking to go bullish. We wait. So look at this, they hit the bottom, they hit the top, they issue an entry trigger there, acceptable risk. That's good to take, right? And immediately, zero drawdown, 1, 2, 3. And then it kept going. If you're holding that, it's a good position to hold. Remember, nothing is guaranteed, but it's a good position to hold. High probability it will continue going down into tomorrow and into next week. I think we looked at Euro USD already. Yes, we did. That's it. That's it for the setups for today and for the week. Let me see what we have in the chat. Hi, Hilton. Can you share this worksheet Excel, please? Yes. So I'll upload this to YouTube, and I'll put the link to that spreadsheet in the comments. Same sentiments about the message above. How can I get a template? Yeah, I already answered that. I held from yesterday, but no longer out in profit today. Lovely, Demetria. Gold played really beautifully today. Any observations on US 30 coming back to entry today? Thank you. Oh, yes. So US 30, I know I missed this, right? So US 30, I'm actually looking at this. You see, I have 2 lines marked at the top there. That's my bearish order block, right? We integrate the concepts of tracking order blocks or institutional trading into this method, right? So it's not strictly M's and W's, type 1, type 2, type 3 continuation. We also integrate the knowledge that we have about institutional trading, right? So we have an order block established up here. So we look for them to come back in this order block and take a position there. It would be very low risk, right? Overall bias on this is bearish. I'm not too clear about where we are in the cycles, and I'm comfortable with that. I'll put in some more work and see where I am with it. But so far, what I have overall bearish, and then I looked at this as a bearish order block. So looking to take an entry there. We could also now look at this in terms of levels and cycles. This is a peak low. That's one push, pull back, two push, pull back. We may possibly get another push, or this may have been the third push that just came back to the same level, and now we could be expecting moving into the new week, right? So this is my outlook on this. Let me see, did I close my trade? Oh, I actually got stopped out on this today. I took partials and then I got stopped out. So boom, right? We have tight Asian. This tight Asian session, first leg coming over to New York. We had news today. So boom, then they held the level for a bit. I took this when it mitigated back here because this candle was too long for me to risk. So I took it back when it mitigated in the middle. I held some drawdown for a bit, then into profits, right? And I took some partials at the bottom here, and then I was holding a position, and they came back up and they stopped me out. So it could be a case where they're gonna continue going up, like I showed on the 4-hour time frame, to get the third push before issuing the reversal. Or it could be that they had some persons holding some heavy positions and they didn't want to go down and lose that amount of money. So they're coming up back to clear out those persons before going back down. But I'll continue monitoring and wait, and I'm not going bullish. I'm gonna wait and see if I get something going bearish, then I'll take it. All right, so that's it for the review. I'll now open for questions. No questions? All right, no problem. Remember to answer the survey in the group chat, whether you're profitable, whether you had a loss, or whether you break even. Answer it so we could get the idea of what's going on in the group. So how many persons did we have on tonight? 31. So I expect 31 responses in the survey, right? All right, that's it for tonight, folks. Catch you guys next week. All the best.
Thank you, Hilton.
Thanks, Hilton.
Thank you, Hilton.